Hi, thank you, Dave. Thanks for everyone for attending today, and welcome to this educational presentation where today I want to talk about two things you can do to immediately improve your trading in virtually any market. Doesn't matter if you're an intraday trader or if you're an investor or if you like to trade crypto or 15-minute currency pair charts, makes absolutely no difference. I really think that these two things that I'll be teaching you today can really help take your trading to the next level. For example, let's take a look at this older chart of GME. This happened just a few months ago. Someone looking at this chart in GameStop would say, well, Steve, really nothing happening here. Sure, it kind of seems to be drifting up a little higher, but we're really in a directionless market. I'd rather wait till something happens so I can get in and have a sure bet. Well, with the two things I'm going to be teaching you today, the first thing would have actually told you that the overall trend is up. So with that being said, half the battle is done. You know, if the overall trend is up, that you should be a buyer or have a buyer's perspective. And the second thing I'll be teaching you actually would have showed you that the short-term trend was up. Now, when you combine these two things, the overall trend with the short-term trend, without having to look at two different charts, two different time frames, two different patterns, you would have had a synergy for success. And ultimately, you could have potentially captured upwards of 47 points in the next few days. So this is what we're going to be talking about today, the two things that you can do to immediately improve your trading. You can apply these two things to virtually any strategy you're currently trading, any method, and I really think they will improve your odds for success. So welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Specialists aren't around these days with the advent of electronic trading, so you really won't find a lot of specialists on the floor anymore. But if you ever Google those pictures of the trading floor back in the 20s and 30s, if you ever see the guys behind those large wooden podiums that were making these weird hand signals with a lot of paper on the floor, those were specialists. So in the old days, if you had an order, your floor broker would take the order from the stockbroker. He would walk up to the trader who specialized in making a market in that particular stock. So that's what a specialist was. So I made markets in roughly about 60 stocks. I made markets during the crash of 1987 and the bull market that followed. So I've traded just about every market environment you can think of. Straight up markets, straight down markets, sideways markets. On top of that, I've traded just about every system, every technique, every strategy you can think of. If it's brand new, trust me, it's most likely been around before. It's just been rebranded and given a new name. So I know what works in my 47 years of trading, and I know what doesn't work in terms of consistency. So about 15 years ago, I teamed up with Pro Trader Strategies with one goal, and that was simply to educate traders all these things that have high levels of consistency. And that's where we formalized Specialist Trading. So basically, we are an educational company. Our goal is simply to educate you, to put the power back in your hands so that you can make your own trading decisions. And you'll see that in today's educational presentation. Now, before I begin, though, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using these two things that you're going to learn today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get education from us on a daily basis is to follow us on Twitter, or X, however you like to call it. There's our handle there, abbreviation at Specialist Trading. You may want to copy that down. Every day I post upwards of 5 to 7 different snapshots of signals or setups that our strategies or methods have generated. I also post little bits of financial wisdom. So there's lots of great free education on a daily basis. So please, if you haven't done so already, please feel free to follow us on Twitter. Okay, with that stated, let's begin. And I'd like to start out with something that my mentors taught me, because I've made no qualms about this. My first year or so on the trading floor, I struggled tremendously. I was doing probably the same thing that many of you have been taught, basically waiting for earnings to come out to find out what you should buy or sell, or waiting for an economic indicator or announcement to come out to find out if I should be bullish or bearish on the market, or listening to some guy. We didn't have chat rooms or trading rooms then, but we had a lot of news services, and we had a lot of subscription services we would subscribe to, and these gurus would tell us what they liked or didn't like about the market. I was doing all these same things and basically just trading water for my first year. I couldn't really get going in the right direction. I was really struggling. I didn't know how much longer I was going to be trading on the floor. And my mentors taught me this, which I teach my students around the world. Here's what they said. They said, Steve, it's not that you're looking at faulty information or trading the wrong strategy. It's basically overthinking is what kills your trading. The market tells you everything you need to know. See, I was looking for all the answers and some perfect system, some perfect indicators, some perfect guru that would tell me everything I needed to know. But actually they said, listen, you don't have to waste your time or even hard-earned money on these things. The market is telling you each and every moment what it wants to do. The only trouble is we're never taught to listen to the market. We're always taught to listen to some guy on TV or even some guy in a webinar tell you what he thinks of the market. But if you learn how to listen to the market, it's a lot easier and so much more simple to discern what the market wants to do. So you're going to learn these two things today that are based on what the market is telling you, and you're going to see how simple they are. In fact, you're going to even not believe how simple it is, and you're going to say, well, how can this work? But then you'll see how powerful it can be, because listening to the market is really based in simplicity. Okay, so here's the first thing we're going to be teaching. Here's the first edge, all right? If price is above the 50-period simple moving average, the market is telling you, not me, not some guy on TV, the market is telling you the overall trend is up. And conversely, if price is below, the market's telling you that the overall trend is down. It's that simple. But let me show you how powerful it is. Let's look at this overall trend picture here of this generic chart. Someone looking at this would say, well, Steve, I know we're supposed to follow the trend, but there is no trend. We're kind of going down, back up, back down. So why would I want to trade this? Well, this is the way most traders trade. But if you apply the 50-period moving average and you ask yourself, where is price in relation to that? Well, price is above. So if price is above, what is the market telling you? The market's telling you that the overall trend is up. Now, conversely, we look at this chart here, this generic chart. Could be a 5-minute chart, could be a monthly chart. Makes no difference. But someone looking at this would say, well, see, there's no trend here, kind of a whipsaw market. Not really. If you apply the 50-period moving average and ask yourself, where is price in relation to that? You see that price is below. So what is the market? Not me, not some economic indicator or announcement. What is the market telling you? It's telling you the overall trend is down. Now, why is this so important? Well, because we will only generate buy setups in any strategy, any technique we have, if price is above or closing above the 50-period moving average. And we will only generate sell setups or sell techniques if price is below the 50-period moving average. You automatically put the odds in your favor, and you already increase your odds for consistency by applying this simple edge here. And if you don't believe me, go back and look at your last 10, 20 trades you had. I can almost guarantee you that the reason why you had losses was because you were out of sync with this simple rule. Okay, the simple edge. Go back and look. So remember, it doesn't matter if you're looking at a 5-minute chart or a monthly chart. You should always have a 50-period moving average applied. And if your strategy or system generates a buy signal, it should be above the 50-period moving average. You'll put the odds in your favor that way, okay? All right, so that's edge number 1, looking for the overall trend. Now, what about edge number 2, which really helps us to find the short-term trend? Now, when a bar closes in the top 25% of its range, the market, not me, the market is saying, I want to go higher on the short term. And conversely, when a market closes, or I should say when a bar closes in the bottom 25% of its range, it's telling you, the market is telling you, I want to go lower on the short term. Now, if you're not familiar with closing in the top or bottom 25%, it's simple. As we look at this generic bar, once again, could be a tick chart, could be a 5-minute bar, could be a monthly bar. Doesn't make any difference. If you're above the 50-period moving average, simply divide this bar by 4 separate but equal parts. And if you close in that top 25% here, what is the market telling you? Well, the overall trend is up, and it's now also telling you that it wants to go higher on the short term because the short-term trend is up. All right? So let's look at this generic chart once again. We know that the overall trend is up, we have a bar here that closes in the top 25%, and look what happened, okay? Now someone can say, well, Steve, yeah, but it didn't go up very much, and then look what happened after that. So I would have lost money. Well, not necessarily, because look what happened. If you wanted to short this, well, sure, you would have had to been quick for one day, but then once again, we have a bar closing in the 25%, top 25%, and just days later, it's making you highs. So which would you rather do? Follow something that's more consistent and in sync with the overall and short-term trend, or try to short and be very quick about it, get out with one day or as quick as you can, and if you didn't, you'd be losing money. See, this is why we say the odds are in your favor if you're in sync with the overall and the short-term trend. Or how about this chart, okay? Once again, makes no difference what time frame this is, but you want to simply divide it by 4 separate but equal parts, and if you close in that bottom 25%, the market is telling you it wants to go lower on the short term. So if you combine this with being below the 50-period moving average, you have the short term and the overall trend in sync. There's absolutely no reason to look at 2 different time frames, absolutely no reason to look at 2 different patterns. It's right there in front of you. As you see here, we are below the 50-period moving average, so the overall trend is down. Now we identify a bar right here that closes in its bottom 25%, and guess what? The market fell out of bed. Now, these 2 edges, these 2 simple things but powerful things are incorporated in the majority of all our strategies and techniques and methods we have at Specialist Trading. Some of our most consistent strategies are based on these 2 edges that I just shared with you. But up until right now, they're just 2 different rules, 2 edges. There's no real structure to them. So here's what I'm going to do today. For all the people attending, we are going to give you a great trading technique using these 2 things that I just shared with you. Now you can start using this technique as early as today, but please remember, this is not a strategy. A strategy comes with the full-fledged rules to buy, where to exit, where to place your stop, money management ideas. That's a strategy. A technique simply highlights or spotlights a high probability area for entry. That's all it does. Doesn't tell you where to place a stop, doesn't tell you where to get out, doesn't have all the other rules of the game. So this is just a trading technique, but feel free to experiment with it. You can add it to your current strategy right now, but you'll see how powerful this is, okay? So let's get into it now. Let's look at this chart here in HPQ, all right? Here's how this technique works. What's the first thing we do? We just shared with you, okay? That's edge number 1. We apply the 50-period moving average, all right? Now, initially, price was below, so the overall trend was down, so we're looking for some structure to sell. But what happened right here? We had 1, 2 closes above. So this is enough to tell us that now the overall trend is up. So this is how this technique works. We're going to apply that top-bottom rule that we talked about, if bars closing in the top or bottom 25% of their range. Now, here's the beauty of the platform that I developed with Pro Trader Strategies. Everything is 1 click away, including the 50-period simple moving average. All you have to do is click on top, bottom 25%, and you'll see these bars here that close in the top 25%. Now, the technique works this way. We want to find bars that are touching or intersecting or very close to that 50-period moving average, and that they close either in the top or bottom 25% of their range. Now, in this case, we have 2 bars here that close in the top. What is this telling us? This is telling us there is a very high probability that this is going to go much higher. Okay, you can use this as an entry if you'd like. You can apply it to a current strategy you're trading. But if you have 1 or 2 bars, the more the better actually. 1 is enough, but you'd rather see more that are close to or touching or intersecting the 50-period moving average, and they close in the top 25% of the range. The market is telling you it wants to go higher. So look what happened after that, okay? Now this was not based on any news. Obviously some news or something came out right here which caused this to gap up. Not based on any economic indicator that was announced, not based on what some guy said on TV, based only on what the market was telling you in advance. Just the way my mentors taught me. Overthinking is what kills your trading. If you simply learn how to listen to the market, it tells you everything you need to know. All right, so now you know the technique. Let's look at some recent technique examples, how they could have helped your trading. And remember, you can start applying this as early as today, but I would really highly suggest that you just paper trade, because we don't want you to jump in too quickly. Most likely you'll not read the rules correctly, and you'll jump in and you say, hey, this doesn't work. And then if you look at it again, you'll say, oh, I forgot to do this, or oh, it wasn't touching the 50-period moving average. So try to paper trade it first to see if you can apply it to your own trading, okay? And remember, everything you're seeing today is by applying the PTS Primo charting platform with this simple technique. Everything is one click away. There's nothing you have to figure out. You don't have to divide any bar in 4 separate but equal parts. You don't have to look for the 50-period moving average, apply it. It's all one click away to make your trading simple. All right, let's look at this chart in NVIDIA, NVDA, all right? Someone looking at this in May would have said, hey, there's a lot of resistance here. And you know, that guy in that chat room says that we should probably exit our longs and get out of this because it looks like it's going to be coming lower. There are a lot of sellers right here at this resistance level. Remember, this is an outside source. This is the way I used to trade, listening to these things, but now I only listen to the market. With one click on the top bottom 25% tab here in our platform, you would have seen the 50-period moving average and the bars that close in the top 25%. Now, initially, there was a bar here that was telling you it was going lower. Now, if you wanted to use this as a sell signal, granted, sure, it would not have worked out well. But look what happened. You would have stopped in reverse based on these 2 bars and look at the other ones, telling you that, listen, we want to go much, much higher. This was about 3 months ago. Coming into July, it was already up 50 points. This is, you know, I believe it's split. So this is actually many, many more points after the split. Let's look at a 4-hour chart of the Euro British pound. Okay, someone looking at this will say, well, it looks like it's going lower, but that guy says it's kind of oversold. Well, we apply the top bottom 25 bars with the 50-period moving average. And we see here that we have a bar intersecting that closed in the bottom 25% with the red arrow. And we have another one very close to. That's enough for us to say, no, it wants to go lower. And in the next week or so, fell 100 pips, or roughly about $1,000 per unit. That was on a 4-hour chart of the Euro British pound. How about a daily chart of Cintas, all right, CTAS? Not much information, kind of drifting higher to sideways. Click on the top bottom 25% bar, and we have the 50-period moving average included. We have a bar that is touching or intersecting, and another one very close that both close in the top 25%. That's enough for us to say, hey, this wants to go much higher. 85 points coming into just a few weeks ago. Now, someone looking at this chart here of Salesforce would say, hey, Steve, we're in a range market. There's not really anything happening. Once again, I've always been taught, stay away from these markets. This is where you get whipsawed. So you don't want to do anything here, because the minute you buy, it goes lower. And so probably if I sell here, it's going to bounce and go higher. So I'll wait for a breakout to tell me what I should do. Once again, this is what most traders base their trading off of, waiting for things. When in actuality, if you learn how to listen to the market, click on the top 25% bar here, and we see that we are below the 50-period moving average. So we automatically know it wants to go lower. The overall trend is lower. And look at all these bars touching or very close to intersecting the 50-period moving average that closed in the bottom 25%. The market is not in some type of range. It may appear it's screaming it wants to go lower. Both the overall and the short trend are in sync, and they are touching or very close. This is the technique telling you we want to go much lower. And look what happened. In the next week, it fell 73 points. Now, obviously, some news or some announcement came out where it caused it to gap down about 50 points. Isn't it funny how we knew well in advance that it wanted to go lower? Why? Because just as my mentors taught me, the market tells you everything you need to know. If you learn how to listen to the market, it's a lot simpler. Let's look at ORLY, okay? Looks like a downtrend, right? But if we follow the plan here, we see the same thing. We had one bar just barely closing below the 50 in the bottom 25%. Had you taken that as a signal to sell at the market or to go short to buy some puts, well, that would have resulted in a minor loss. You would have had to switch, but you switched in reverse, because look at the next 3 bars closing in the top 25% were either touching the 50 or very close to it. So that's okay. The market changed its mind, decided it wants to go higher. And you think you could have made back whatever you lost on that first setup, because it was up 115 points coming into just a few weeks ago. How about Adobe? Obviously in an uptrend, right? This is making the textbook example of higher highs, higher lows, right? Well, this is why most traders fail using technical analysis 101. That's really not what the trend is, because if we apply the 50-period moving average, we have a bar closing below, two bars closing below the 50 that either touching or very close to that 50-period moving average. So even though it appears that we're going higher and that you should buy this, the market was telling you something else. It was telling you, no, I want to go lower. And you're taking advantage of Adobe back in March, coming up till the end of May into June. That's 140 points. And look what happened just 2 days after these bars. Once again, a huge gap to the downside. Now, if you missed this, don't worry. There was another chance to get in just before this big drop right here, okay? Remember, this is all one click away on our platform, the PTS Primo charting platform. All right, let's look at MDB. All right, let's take it from the beginning. We have chart here looking at about 6 bars. Someone could say, Steve, how can I make a decision based off this? Well, it's easy if you follow this simple rule. Apply the 50-period moving average, and for all intents and purposes, the overall trend was up until this bar. We closed below, and we closed in the bottom 25% with the red arrow. Now, we'd like to see more bars, but one is enough at least for us to be a little bit negative. And look what happened. 2 bars later, well, we got another one. Even though it's not touching, it's close to the 50-period moving average. So this is enough to tell us, listen, if some guy in a chat room is telling me to buy this, it's oversold or it's hitting some support, I'm not going to do it because I'm going to listen to the market first. And the market's telling me it wants to go much lower, which in fact it did. 2 days lower, it gapped down, dozens of points. So once again, the market was telling you in advance what it wanted to do. Now, lastly, let's look at an entirely different time frame. Let's look at a weekly chart, because if you're an investor or some type of a swing trader, sure, you can apply the same rules. Nothing changes because we change markets or time frames. Here's a weekly chart of Costco going all the way back over a year, back into March or May of 2023. Now, once again, nothing really much to tell here. Looks like we're in a range market, right? We're at the bottom of the range, top of the range, coming back down. So the market really is in an indecision pattern, right? Well, not really, because once again, if we apply the top bottom 25% with the 50-period moving average, what do we have here? We have 1, 2, 3, 4, 5 weekly bars that are not only intersecting, touching the 50-period moving average, they're also closing in the top 25% of the range, all with one click on our platform. And guess what? That means the market, not me, not some guy in a chat room, not some guy on TV, or not some earnings report. The market, the chart right in front of you, the only thing you should be listening to is virtually screaming it wants to go higher. And look what happened coming into this past month or so, 325 points. So now we ask ourselves as we recap, what my mentors taught me. Are we overthinking the same way I was overthinking? Remember, overthinking is what kills your trading. The market tells you just about everything you need to know. If you think that this is too hard to trade this way, if you feel you must rely on listening to news or some guy on TV or some guy in a trading room, take it from me. I stopped listening to news 45, 46 years ago when I finally learned these techniques from my mentors, okay? And I'm still here trading. So I'm living proof that you don't need to rely on those things. Now, obviously, if you want to, by all means, go ahead. We're not here to tell you what not to do. We're here just as mentors to teach you how you can improve your trading and take your trading to the next level. So ask yourself, do you think these 2 edges can help your trading for the remainder of 2024? I know how difficult trading can be. I've been there. It's frustrating and very depressing because you work hard, you spend a lot of time trying to refine it. You're not getting the type of results you were promised. In fact, I can almost guarantee that we're halfway or more than halfway through the year and you're nowhere where you thought you'd be in January when you made yourself all these hopes and dreams of where you wanted your trading to be. I think these 2 edges can help you, along with some other things that I think are really going to take your trading to the next level. So here's a great offer we have for all of you taking time out of your Wednesday morning to attend this presentation. This is what we call our Secrets of a Stock Exchange Specialist video seminar course, all right? A few years ago, I was asked to be the head speaker at a conference that was taking place in Denver, Colorado, where I spoke for roughly 3 hours. And the good news is that they recorded the entire presentation. And so what we've done is, and they gave us the recording, we have this now, and this is our Secrets of a Stock Exchange Specialist video seminar. And in that 3 hours, I talked about many more high probability trading edges, more advanced edges than the ones I just talked about today. I also went into detail about not only which indicators to use, but more importantly, which indicators not to use. I went into detail about the difference between a system versus a strategy. Talked about the #1 chart pattern you should always be looking for, how to be on the right side of the market in any market and in any time frame, and how you can apply all these edges, 3 hours worth of edges and different trading methodologies to any market and any time frame. Makes absolutely no difference. But here's the best thing about this video seminar. I gave the complete rules to one of our premier pullback strategies. That's strategy #1. Now remember, today, all I did was give you a technique. Remember, a technique just highlights or places a spotlight on a high probability point of entry. But a strategy comes complete with entry rules, where to get in, where to get out, money management, where to place your stop. And so that's what you're getting in this 3-hour video course, the complete rules to strategy #1. Now, strategy #1 is a pullback method. For those of you who aren't familiar with what a pullback method is, let me share with you this chart here. A pullback method looks for an overall trend to be established. In this case, obviously, it's an overall uptrend as we're going higher. But with pullback strategies, they look to buy at these dips, these sell-offs within the overall uptrend. They're looking and they're waiting to buy when the market goes lower, when everyone thinks that the trend has actually changed. According to the rules, if they meet all the requirements of a pullback strategy, that's actually a high probability entry point. So as we can see here, looking at this chart, all you would have to do is click on strategy 1, once again, on our platform, click on the signal arrows, and you'd see that these were all buy areas. And each and every one of these buy areas, look what happened with the market, immediately went higher. A couple of buy signals here, immediately went higher. And look what happened just days after this buy signal. Gapped up, most likely based off some news once again. But remember, strategy #1, along with all of our methods, has nothing to do with fundamental news or announcements or indicators based on economic announcements. It's all based, once again, on what the market is telling you. Now, this can also be applied to downward markets. Someone looking at this would say, okay, yeah, it's kind of drifting a little bit lower, but look at here. We have 3 up days, bullish engulfing pattern. You know, why would you think that this is a sell? Well, strategy #1, clicking it on, generated a sell signal right here. And look what happened just days after that. It fell 25 points where everyone else thought it was firming up and getting ready to go back higher. So strategy #1 can be applied to any market, any time frame, any direction, buys or sells. So you'll get the complete rules to that as well. Okay, so let's break it down. Now, normally, there is so much information jam-packed in this course. There's basically 47 years of education, things I've accumulated in my 47 years of trading. That's why we charge roughly close to $1,000. If you look on the website, Pro Trader Strategies, it's charged for $1,000. Here's what we're going to do. For a limited time only, we are dropping this down tremendously. I don't see how no one would want to take advantage of this. We're dropping it down to a discounted price of only $37. But remember, and trust me when I say this, this is for a limited time only, $37. I mean, you can't even go out to lunch today for a couple of people, less than $50 or $60. So $37, you're getting nearly 5 decades of information, techniques, methods, edges that I've accumulated that I use in my own personal trading to this day for $37. That's an amazing discount. But we're not going to stop there. All right, we have an extra bonus included. If you decide to take advantage of this, okay, along with your purchase of the Secrets course, we will also include a 50% discount on any other product we sell. So let's say you become a student of the Secrets course and you say, you know what, I want to take advantage of purchase another strategy or another edge or something with the platform. We will include a 50% discount on any other product we sell. So this is a phenomenal way to get acquainted with everything we teach, with how we really want to take your trading to the next level, because you owe it to yourself to take your trading to the next level. invest in yourself. I know that just because I was there, I know that when you get to a point where you're really struggling, you're just believing everything and anything you hear, and you're saying, okay, I'll spend $5,000 on this just as long as it'll get me out of the hole and make me a success. And I've been there, and it's very discouraging and frustrating. I always knew that if I was in a chance to teach, I wouldn't want to charge that just to get someone, when they're in a state of desperation. I would want, in good faith, to have them not spend or have you spend as little money as possible. And $37, you're going to get a ton of information. So I know it won't break the bank, even if you're struggling. It's the worst thing in the world to just take advantage of someone who's struggling and use their last penny on something that really has no level of consistency. So for $37, you'll get all of this and more with that 50% discount. So here's how to take advantage of this extremely discounted offer. Contact my sister site, Pro Trader Strategies. They're in charge of all of the discounts and all of the tech support with our platform. I developed the platform with them. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be happy to take your order over the phone or answer any question concerning tech support or data or other methods that we may have that perhaps you heard about. Now, that link you see at the very bottom is the link that will take you to the info page. I believe you can also sign up or using that link. It's not a live link though, but I believe Dave and the people at the August Festival of Traders are going to be posting a link for you, so you can click that on if you'd like. Now, I'll leave all this information up here for you. I promised I would reserve the last portion to answer any questions, so we have a little over 5 minutes. If you do have any questions, just go to the question and answer box there on the GoToWebinar platform. Let me see if there are. Just listen to what the market says. Yes, so let me just open this up a little bit more. Yeah, just listen to what the market says. Sure. Someone says, I remember this. It's true. I mean, I know it sounds a lot easier and it's too simple, but trust me, you have this information for free that I've given you. So go back and look at and see how powerful it is. There's nothing you have to spend and say, well, this guy says that it's easy, but I'm going to have to spend $2,000 to find out. No, you have this information right now. Remember, 75% of all of our methods and techniques and strategies and trading tools are based off of these two things that I just shared with you today. So if we believe that strongly in them, I'm sure you can find out how much it can really help you. So in fact, when I was looking at a couple of charts before I started here, there's a chart in Google. If you have access to charts right now, go look at the Google chart. Just go back about a month. I know Google is trending lower today, but if you apply the 50-period moving average along with looking at bars that close in the last 30 days and their bottom 25%, you'll see that Google was telling you at higher prices, I want to go lower. Okay, a daily chart of Google, apply the 50-period moving average and the top bottom 25% technique. You can simply look and see, and you'll see that it works like a charm. So you'll see this happening over and over again. Is the moving average just a simple moving average, or can it be EMA, which is exponential? Good question. It's a simple moving average. It's a 50-period simple moving average, and you can experiment. When I first learned this from my mentors, I did the same thing. I said, why do we have to use a 50-period simple moves? Can I use a weighted? Can I use a triangle a weighted average? And guess what? I experimented with everything with different time frames. I experimented with a 20-period moving average, 34 Fibonacci moving average, and guess what? After years of experimenting, it turns out the 50-period moving average is the best, only in terms of because you can apply it to other markets. See, we want to make things simple. We don't want you to say, okay, well, for stocks, for a weekly chart of stocks, I have to use a 100-period moving average. But I'm also trading 5-minute charts of the E-mini, so now I have to go back down to a 10-period moving average. You want something that will be applied and transferred easily onto any market, any time frame. And the 50 seems to work the best. But please remember, this is not a trading system or a strategy. Simply because price is above or below the 50-period moving average does not mean that you buy at the market or sell at the market. It's just telling you what the overall trend is. Then you have to add some structure. So that structure is one of the things which I shared with you today. That's the technique of also seeing bars that intersect or touch that 50-period moving average that close in either the top or bottom 25%, okay? But please feel free to experiment. We encourage this. We want you to be a part of the process. I'm an aspiring day trader. Will this system work for me? Well, remember, this isn't a system. This is just a technique. A system and strategy come complete with rules. They tell you exactly where to buy, exactly where to sell. This is just a technique. So the good news is you just got free information. You don't have to spend any money, and you can just simply go and try this out for yourself. But for $37, you're going to get a full-fledged strategy with those rules. So I would take advantage of that as well, okay? Is the VWAP useful along with a 50-period simple moving average? Well, I wouldn't actually start to apply more indicators and things, because then it starts to be, you're overcomplicating things once again. Remember, we want to stay away from that overthinking. Keep things as simple as possible. I remember when I first started trading, I used to trade these systems or come up with them that had 10 or 20 indicators, 50 rules. It was amazing. I don't even know how I even got a trade off, because I had so many things that had to line up in order for a signal to be generated. But my mentor said, listen, you're overthinking stuff. Trading doesn't have to be that complicated. And they said, you know, it's the easiest thing in the world to overcomplicate your trading. It really doesn't take a lot of, characters to overcomplicate. You can add as many indicators, as many different things onto your trading plan as you want. You can be trading for 2 weeks and put everything on there. So it doesn't take a lot of experience or character to do that. But it takes a lot of character to simplify things, because we've always been taught the opposite. We've always been taught the more the better. But in this case, it's the opposite. If there's one thing I've learned in 47 years of trading, it's the things that have the least rules that are the most consistent, not the ones that have the most requirements and rules and indicators. It's the exact opposite. So trust me, you have a free technique here to work with. If you feel that shows you some levels of consistency, then I would hurry up and take advantage of this $37 offer, because there is a full-fledged strategy included in that, along with a 50% discount on any other product. So you can, I wouldn't want you to miss that. And then once you decide that, wow, this can really help me, it's back up to $1,000. So we're trying, we're educators. We're not vendors. We're not trying to sell systems all the time. We're trying to educate you so that you don't have to rely on us at all, so that you can rely on what you've learned and then just be your own, mentor to yourself. Okay. Good questions. Anything else? Remember, along with this, any product we have, any teaching course we have, you also get educational correspondence, which I showed earlier before on the promo. And educational correspondence simply means that you'll be able to speak to me via email whenever you'd like. You get my personal and private email address. Now, a lot of people say, oh yeah, I've gotten that before, but usually that will go to, with another so-called mentor, it'll go actually to a salesperson, or the email goes to an assistant. No, it doesn't work that way with me. I see, and I'm the only one that sees your emails. So they come directly to me. And if you have a question concerning trading, or you say, Steve, am I doing this right? You can always share an example with me. Or it's just something is still giving you doubt and you're not sure about, you can always contact me prior to the opening, after the close, or even during market hours. Makes no difference. Even during the weekend, so you can contact me whenever you like. So this is a great way as well to stay in sync with us, and with me especially. I'll answer any question as soon as possible, okay? That all as well comes included with everything. I think we're just about at the end. We've run out of questions. I think they posted that link for you there. So remember, if you're at all interested in taking your trading to the next level for a very minimal price, a super discount down from $1,000 down to $37, contact Pro Trader Strategies, my sister site. They're in charge of all the discounts and all of the packaging. They can take your order over the phone at area code 310-598-6677. And they're there to work with you. They can answer any question you may have as well, okay? I think we just have a few more minutes left. I'll give it back to Dave, and I just want to say thank you for giving me the opportunity to speak, and I hope I educated some of you today. I wish you all the best of luck, but more importantly, I look forward to having you all become students of mine in the course, okay? Thank you.